I'm your host, and I'll be talking for the first 15 minutes to give you an update on grain market opportunities recently seen through Graindex. I'll then be handing the floor over to Sébastien Mallet, analyst, consultant, and CEO of ODA UK. Sébastien will be sharing his opinion on grain markets and answering, will grain prices remain high in 22? A bit of housekeeping. We will aim to promptly finish at 10:15 unless our Q&As run over. We will be offering Q&A sessions at the end of each of our presentations, but we also want this to be interactive. So I encourage you to ask any questions throughout our talk by using the raise a hand button or writing your questions in the chat function. Please send your questions directly to Aisha Shabna, who is helping me today from our marketing team. We will be recording this webinar and sharing it afterwards. Please make sure that you're on mute to avoid any background noise until you wish to ask any questions. And when you ask questions, we ask that your video is on. With all that said, I'll jump straight into it. Firstly, I'd like to introduce our Graindex team, which has recently expanded. Starting with Andrew Huxham, our co-founder and arable farmer from West Sussex. Andrew felt frustrated with the lack of transparency in the grain market, so created Graindex by farmers, for farmers, launched 2015. Today, Andrew manages our strategic direction and key industry relationships. We now have 4 business development managers. We work alongside you, helping to manage your grain listings and in the background to help more sellers meet more buyers and increase trade opportunities. Andrew Collin, based up in Aberdeenshire, manages our Scottish region. He is also Vice President of NFU Scotland and sits on the board of Combinable Crops Committee. We have Patrick Bidwell, based in Essex, joined in 2019, having previously been a farm trader for Frontier. Patrick covers our eastern and our southern regions. Myself, based in Herefordshire, I joined March this year, having also previously come from Frontier as a farm trader. I cover West and Southwest regions. And our newest recruit, Rachel Fennick, based in Lincolnshire, joined last month coming over from ADM, looking after our northern and our eastern regions. We work very closely as a team and our core values are simple: to promote market transparency, efficiency, and above all, be independent. So let's start by looking at bid spreads achieved through Graindex, and this can really help illustrate our market environment. To clarify, bid spreads is the difference between top and bottom bid values on a listing. And this chart shows our average bid spreads across our traded commodities. Within the last 12 months, I have seen that increased market volatility comes increased bid spreads. For example, feed wheat increased by nearly 30% from crop 19 to crop 20 this season so far. Milling wheat bid spreads, you can see over £6 a tonne, feed over £5 a tonne. Oilseed rates, here we are, bid spreads for crop 19 averaged at £4.20. This figure increased by 74% for crop 20, and this season so far, oilseed rate bid spreads have averaged at over £7.50 a tonne. It's also important to note that you'll see that there is never one or even a few buyers that consistently come out on top. It changes weekly, if not daily. The bid spreads that you receive on your grain really do show how dynamic the market is. It gives you a flavour of the buying appetite out there and whether a market is seller or buyer driven. So take advantage of this opportunity created in the difference between the buyer's appetite and needs. I want to now highlight some of our recent trades to give market insight and also share some good examples of our users reaping opportunity out of Graindex. Here are 2 traded listings. One to the left is on the tablet and one to the right is on a phone. Both from a farmer in Gloucestershire who is predominantly a Group 1 milling wheat grower. However, this harvest, there was a parcel of his Zayat that tested low on protein between 11.3 and 12.4%. To keep this parcel separate from his full spec, he used a store on another farm in a bay that had limited ventilation. So to avoid long-term storage issues, he wanted it cleared out by December, at the latest January. Now, we know that low protein markets, particularly this side of the country, can have limited availability, especially pre-Christmas. We didn't want to miss out on securing movement, but we also wanted to take full advantage of a rising market. So we sold in 2 lots. 10 loads were listed on the 30th of September. This is half the tonnage available. He used the extra tonnage feature and put down that there was actually 600 tons available in case Bobby Dazzler of a bid came in and he wanted the option to sell more over his listed tonnage. This listing had samples attached and clear notes that about what he had clear notes on what he wanted to achieve out of the market. And this really helps the buyers to tailor their bids. The 10 loads sold at £212 a tonne. At that point, a tidy premium of £16 a tonne over feed. 3 weeks on, both feed base and premium had gained in value, but the market was filling up, so it was time to list the remaining tonnage. A further 10 loads were listed 2 weeks ago, sold at £230 a tonne. Again, at that point, a nice £27 premium over feed for the low protein market. You'll see that actually 230 wasn't the highest bid. One of our buyers, labelled here buyer 3, had seen the attached samples, noticed some samples had reached over 12% protein. So this buyer actually placed 2 bids. One at full spec, with fullbacks down to 12% at £240 a tonne, and the other based on 11.3 protein. So this is a nice example of the buyer giving the seller the option to decide which market might suit them dependent on their risk appetite. It's also, just as a caveat, worth noting that this seller also sold 7 loads last week for his full spec Skyfall at £255 a tonne, movement December. Here are some snapshots of sold listings and their bids, starting with malting barley. End of September, we saw a good run of malting barley, with growers taking advantage of the export program out of the south planned pre-Christmas movement. This listing was a malting barley spec on Planet X Wiltshire. Samples were attached and the notes detailed flexible movement between spot and Christmas. This sold for £225 and 25 pence a tonne, with movement terms between October and the 20th of December. Moving on to oilseed rape, which has just simply been phenomenal. It has been a pleasure to facilitate trading in this market when week on week we keep breaking record highs, definitely keeping us on our toes. Here is a listing traded at £568 a tonne. This was the highest bid. This wasn't the highest bid, sorry, again, but it was the highest bid with the earliest movement, which happened to be movement that week. So just to say, Graindex is not all on price. It's about the full terms and finding the best terms to suit your needs. Moving over to beans. Andrew Huxham is calling it the year of bean, and I think he could be right. We've seen a lot of interest in our bean listings. For example, this listing of 3 loads feed beans ex Warwickshire received 7 bids, all for the same month with a £12 spread on value and sold for £240 a tonne. Pulses are bought more on a visual appearance. This listing not only attached the sample result, but also a photo of the sample, the bean sample, and the whole pile in store, which really contributed to this listing receiving an increased level of interest. In this listing also, it's worth mentioning, there's a good range of buyers that included nationwide merchants, regional buyers and local buyers, and also an end user. Now, a range of buys is something we as BDM strive to achieve on all of our listings. And it nicely leads on to milling wheat. This milling wheat listing was 7 loads of full spec Crusoe. It was from a first-time user of Graindex who had previously been trying to trade directly with a local mill with no success. That mill is an active buyer on Graindex. And it was his bid that was accepted. Even though it wasn't the highest bid by £2.75 a tonne, there were 2 key reasons for accepting this end user's bid at 240. One, it offered the earliest movement, but 2, aside from preferring to trade directly, this one was conscious of his carbon footprint and wanted to opt for the closest home. Now, this is becoming a regular topic of conversation I'm having with both buyers and sellers. Moving into new crop with good progression made on planting next year's crop, I've seen a decent increase in crop listings for both wheat and oilseed rape. Last Friday, feed wheat traded at £190 a tonne for harvest as available movement. That was ex-Wiltshire. New crop oilseed rape traded yesterday at £480 for, again, harvest as available movement. That was ex-Cambridge, Cambridgeshire. For Group 1 growers out there, feed wheat based pricing has also been popular. We've seen listings receive plus premiums if applicable terms against their bids. So, for example, min 15, max 30 for Group 1s. And on this listing here, the £193 a tonne that was accepted came with a minimum £30 premium if it made Group 1 with no maximum. So again, I want to say it's not just all about price, it's about the full terms. I get a good bird's eye view on market opportunities for both old and new crop. And I'm always happy to share this insight with you. As a side note, for forward sellers, it might even be worth looking at new crop, so that's harvest 23, to see what it could bring to the table. But I'll let Sébastien go into more detail about those markets. Our role isn't to advise on grain markets, but what we can do is share concise, relevant, and real-time traded information. Price targets have proven to be really successful with our premium members, making sure that they sell at, if not over, the level they want to achieve. It's pretty simple. You just let your BDM know the value you're interested at, and we'll notify you when we see it trading near to or at your target for local to your area. It works both ways. We'll keep you informed both when the markets are moving up as well as down. And here's my plug. This service is a part of having a dedicated account manager, which is available within our premium membership packages, alongside all of these other features that you see here. Please speak to your BDM if you want us to manage target pricings for you and become a premium member. Now, it is our job to help manage your listings and put them in front of the right buyers, but you can also help by doing a few things that make sure listings are as effective as possible for the buyers to take note. Number one, post your listing in advance. Give the buyers a heads up by posting your listing in advance of it going live. Your contact details won't be viewable, but until it goes live, but the buyers will see it pending. We'll see the commodity detail, we'll see the quantity, movement period, and also which county it's coming from. Extra tonnage, when listing under quantity, you can let the buyers know that there is more to sell in store. At the point of accepting a bid, this then gives you the flexibility to sell more over your listed quantity up to the buyer's maximum quantity that they want to buy at. Attach your samples. I mentioned it earlier. It gives the buyers confidence in placing their best bid for the most suitable market for your grain. Any results or even photos just need to be in a PDF form. And if you need any help with that, please let us know. Additional notes. I've said this also a few times. What is your priority? Is it movement, payment, destination, fallbacks, haulage? any information can really help engage the buyers by ensuring their bid is tailored to your needs. And lastly, open up your bids. When the bids are in, make sure you click into each bid that, so that you get to see the buyer's name, the company details, contract specification, and their comments, which often is in response to your notes to help aid your decision-making process. We know you all work extremely hard to produce high quality crops in challenging seasons and ever increasing volatile market. So to summarize, we want Graindex to be an efficient asset to your business, helping you independently achieve the best deal on the day you're ready to sell through transparent trade. And in short, when you're ready to sell, we would like the opportunity to see what we could achieve for you. I want to end on something a bit of fun. So I've got the rather catchy named game of Guess the Price of Wheat game. So this can help us. This can help us think about the forward markets and also help measure our market expectations. I want you to tell me what you think the closing value will be of the London wheat futures for the position of November 22 on the 2nd of November 2022. It's not a game without a prize. So the closest winner or winners will receive a free Graindex annual premium membership and a free ODA annual subscription. And I'll even throw in a decent bottle of bubbly to celebrate with. I'll also add that the guest furthest away will receive a wooden spoon award, probably a Graindex woolly hat. But to give you a starting point, this morning, November 22 is trading at £198 a tonne. So what will that value be in 12 months' time? You can, the way to do it is you can write your guess in the chat function on this webinar. You can either let everybody know and send it to everybody, or if you want to be a bit more discreet, you can send your guesses directly to me. You can either do it now or at any point and wait to hear what Sébastien has to say. So good luck with that. And before I hand it over to Sébastien, Aisha, do we have any questions or hands up?
Hi, Victoria. Nothing at the moment. No, at the moment.
Brilliant. I have got my first guess in. Okay, that's interesting. Thank you, Simon, for that one. Keep them coming in. Jill, so without further ado, then, if there are no questions at all, and give it a moment. No, I must have been very clear. Thank you. I'll hand it over to Sébastien. Bear with me. Sébastien,
yes.
Over to you.
Thank you very much, Victoria, and hello, everybody. So today we are going to talk about the markets and what we foresee for the coming year. Prices are very high, and the real million-dollar question is, will they remain high in 2021-22, and most importantly, into 22-23? So that's what we're going to go through today. Just before we move to the markets themselves, I'm going to present you what we're going to talk about. So first of all, we will present very quickly what ODA does in the UK, and we'll go through what I call the theory of grain marketing for UK farmers. So this is a list of things I think that are indispensable for a farmer to do, to have at least to have a good marketing, I would say, technique and expertise. Then we will look at where prices stand now, because looking at prices always tells a story. We will then go through the UK data, because it's still important, even if it's a world market that really drives the UK market, the UK prices. Then we will look at a little bit the situation today, why prices are so high, and what has driven them at such a high level. And at the end of this presentation, of course, we will open the discussion and the presentation to the real question is what are the risks, what are the downside risks to these levels, and if prices will remain high, and what strategy we should you should as a farmer put in place to be able to take advantage of current high prices, and of course despite your higher production cost. So just a quick word about ODA. So ODA initially, as you can hear in my accent, was a French company. It's now a UK-based company. It was created about 20 years ago when prices became volatile. I mean, as some of you might remember, prices were very regulated before until the end of the 90s, and very suddenly the European farmers became totally exposed to world volatility without any expertise, without any knowledge to cope with it. So that's when ODA was created to, first of all, train the farmers around Europe to be able to cope and understand these markets. So we consider ourselves, first of all, as a training company. So we have trained nearly 16,000 farmers around Europe over the last 20 years to help them understanding the market, and of course to allow them to take decisions and to take risk management decisions. So over the last 3 years, things have changed a little bit in ODA. So we are now fully based in the UK. So as you can see on this map on the left, we are present in most of the wheat production regions, but we also want to develop in some other regions in the north and in the south, and that's clearly our target for the coming year. But it's not only about the UK. We also have clients, farmers clients. So 100% of our clients are farmers. So we have big clients in Eastern countries where we cover about 150,000 hectares. We have still a few clients in France, and all this, I would say, presence around Europe forms what we call the ODA community of farmers, and that's very important for us because we do not only provide training, information, and advice, but we also take some information from the farmers, and this is very useful to predict the prices when you have a direct information from the combine, or when farmers are drilling, etc., etc. It's very useful because most of our markets are driven by the supply much more than from the demand side of our business. So having a very clear and a very direct and a very fast understanding of what's going on in the fields is absolutely key for us to be able to predict the markets. So as I just said before, we are a training company. So these are the service we provide. We train our clients. So this is through the web or through a full 2 day training on which we cover the physical market, the options, the futures, and most importantly, the correlation between the UK prices and the world prices. And you will see in this presentation that nearly 90% of your ex-farm price is done outside the UK. It's absolutely not very little. What's going on in the UK has very little influence on your ex-farm price. We provide some information. So the information is, as you know, very much available for free everywhere on the web. You've got some information from the traders. You've got information from some analysts. But I would say we differ a little bit from the common information, first of all, because we are independent. We have absolutely no interest for you to sell or to hold your grains. We don't take any fees on that. So we are independent. So in fact, if I were to compare with one of the traders' information, who are using exactly the same information as us, sometimes or very often our conclusions differ because, of course, ADM or Glencore or Openfield or Frontier would have an interest for you to sell all along the year. And of course, and finally, the last bit of our service is advice. So we very precisely advise our clients to sell their grains at a certain time and we do provide some explanation on why we are selling, because we could become bearish or bullish or whatever. So that's what we do. Sorry for this pretty long introduction. And let's start now with another part of the introduction, which I call the theory of grain marketing. So this usually takes 2 days to explain, but I just wanted to maybe sum up a little bit what a UK farmer should do if he has an interest in his marketing. So as you know, prices are very volatile at the moment. It's not always the case, and they should remain volatile for at least a few years. And that's what a UK farmer, that's the minimum things a UK farmer should do if he wants to really handle and have control of his marketing, and of course with the final objective to increase his selling price. So first of all, you need to know your local market, and some very easy profits can be made on local market conditions. Victoria has just mentioned the spreads between the bids, and we see that every day. It happens on Graindex, but it happens also on the physical market. Typically, at the moment, if you look at the new crop breed prices, you will see bids at 182, some others at 188. So you've got 5-6 quid to be made, and just by questioning at least 5 different buyers. So every farmer in the UK, so it can be very easily done through Graindex, which is a very, very good tool, but you should all be able to, at time of selling, to question at least 2 or 3 local buyers for each crops, of course, and 2 or 3 traders, because you will see a big difference in the bids. So that's, and not all the farmers do it, but that's really a must-have. Of course, understanding the quality premiums. So this is very local, of course. We've seen the Group 1 milling wheat premiums going up from 20 to nearly 50 quid now. So having a view on what quality has been harvested will allow you to take some decisions to hold, for example, the Group 1 this year, and to sell it 2 or 3 months later at much higher prices. Basis levels and haulage logistics are also key. As you've seen, the transport cost is a real issue at the moment in the UK. It's not only in the UK, in fact, it's worldwide. But clearly, having a good understanding of your logistics and selling to the right buyer according to your logistic is also key. Another very important thing that we will develop later on is the UK supply and demand, because the UK being an island, according to the production you will have during a season, you will be a net importer or a net exporter. And this is very important, because if you are a net exporter or net importer, and if we just look at the wheat, for instance, if you are below 14 million tons in the UK, you are a net importer globally. And the difference between being a net importer and net exporter is 20 to 30 quid per ton. So being able to anticipate that by, for example, discussing with companies like ODA or others, by knowing what's going on in the field, by knowing how the drillings are taking place, etc., is a very important part of the marketing strategies. And of course, the euro sterling, it has 100% correlation to your prices, because if we are an importing or an exporting market, the euro sterling will dictate the competitiveness of our prices on the import or on the exporting market. So ODA, but also Graindex, provide most of this information, and it's absolutely key. Here, I think there is between 5 and 30 quid to be made just by having an expertise on your domestic market. Second element, which is maybe the most important, is following the world market, the world trends. As I said before, when the sterling is more or less stable, like it is since Brexit, 90% of your ex-farm prices is done on the international market. It's not, I mean, the UK market is only reflecting what's happening in the world, because of course you can export or you can import some seeds from the UK, And if, for instance, you have a shortage in the UK, traders will import from France or from Canada or from elsewhere what is needed for the world market, and the UK market will always adjust to the world prices. So very important to follow these trends. So it's reading, having some independent information, and being able to, once again, understand it. So in ODA, we provide this market expertise, and we also provide these trainings that will allow you to understand that. And I think what is also important to mention here is we consider ourselves as storytellers. And in fact, we also publish on the GrainIndex website every week an editorial on which we give our view on the market. And I think this is very important. We tell a story. So at the beginning of the year, we'll say, okay, this year is a wheat-led market, and this will be the ongoing story for all the season. And then we add every week some new characters, like a drought somewhere, or a new demand coming from Southeast Asia or whatever, that will make prices move. But we really try to make it a story, so that farmers can, first of all, understand it, remember it easily, and then act on it. And thirdly, risk management, which is also key. So risk management is absolutely not something I would say unique for all the farmers. I think every farmer has a different risk appetite. So it's very important to define for each of our clients what is his appetite. Could be high, could be medium, could be low. We've got some farmers who love taking risks, some others who are absolutely risk adverse. And I think it is very important when taking a decision to sell. Typically, when you see the ex-farm price at 190 for next crop, despite high cost, you are doing very good margins in the UK. So typically, some farmers will like to sell 30-40% now, just to be covered because they have a low risk appetite. And some others, because we have a bullish view at the moment, will prefer to wait and take the best out of it. So this is very important. It can be defined through your budget objectives, or it can be defined according to your risk appetite. So that's the introduction. So let's move now to the real markets, which I'm sure you are all very interested in. So I'll try to make it simple, but the first thing I would like to do is look at prices and look at also at the long term before we move to the short-term markets. But the long term is very important. So this first slide is showing you the price trend of the corn market. So corn and wheat are very correlated. So we chose to show you today the corn prices in Chicago to give you a taste of the world markets, for the world market for the last 20 years. So what is very interesting I think in this graph are two things. First of all, as you can see, there are cycles of volatility in the past 20 years. So when the volatility is very low, you can see two things. First of all, prices do not move a lot. And secondly, prices tend to be pretty low. And when prices are low, it means that the market is balanced, which means the supply is meeting with the demand. So that's the first thing. Second element is you've got cycles of volatility. So the last cycle lasted 7 years. So every 7 years, we tend to have new cycles, and we seem to be entering into a new cycle of volatility that should last long. And the reason why it lasts long, because it takes a lot of time for the market to resupply, because when you have a high volatile market, it means that the market is undersupplied and the prices climb, I would say, nearly to the sky with two objectives. First objective is to ration or destroy some demand, because prices are so high, buyers are buying less or using less. And the second objective is to incentivize farmers to drill more for the following season. So as you can see, it usually works, because when prices climb very high, they usually drop very quickly for two reasons. First, because the demand has been rationed, and secondly, because farmers are doing their job to restock the market. And if you have another weather event or another supply event, it goes up again. So that tells you how important in a volatile market to take decisions and not be shy to take decisions in a rising market like we are. We are exactly there at the moment. And a lot of farmers would be very slow or reluctant to sell when the market is rising. And this is a real mistake because you tend then to panic when the prices go down. So selling, a farmer would have sold here or here, will be very happy 6 months later when the market will be there. So that's a very strong element to understand. Another very important thing I think to a conclusion to take from this graph is as you can see, 20 years ago, when the market was well supplied, corn prices in the world was, so this is 200 cents per bushel, so this is equivalent to $80 per ton. So the corn prices in the balanced market was $80 per ton, so something like 60 pounds per ton. Then we moved into a pretty volatile market, and when 10 years later the market rebalanced, it rebalanced at nearly the double price as it was 10 years before. So now a balanced level for the corn market in the world is $160 per ton, nearly the double as it was before. And I will try to explain you in the next slides why. And what we can expect very clearly is that the next steps after this volatile period will certainly be something like 500 cents per bushel, which is about $200 per ton. And there is a very good reason for that. The reason is higher demand, which needs more supply. And the only way to buy new supply or to get more supply is higher prices. The reason is very simple. You know that at the beginning of the 2000s, when the demand started to increase pretty strongly, it's not in the UK, it's not in Europe, it's not even in the Black Sea that you could find, you could not find new land, you could not increase your yields. Your yields have been pretty steady for the last, I would say, 10, 20 years. So the market, the world demand had to find some new places to grow to supply this new demand. So these new places were in Russia, in Ukraine, and when we talk about Russia, we talk about Siberia, we talk about also some more traditional places. But for farmers and the other place was South America, and all these places not only were not arable farms at the beginning of 2000s, but also are very far away from the ports, about 2,000, 3,000 kilometers from the ports. So to enable these farmers to create new farms and to increase the supply to meet with the demand, you needed prices to be higher, because for a Brazilian, for example, farmer to grow some corn in Mato Grosso, so close to the Amazonian forest, about 60 to 70% of his corn price is used for logistics. It takes up to 2 or 3 weeks to move the corn from Mato Grosso into the port. So very high cost, and also you need to invest, you need to create some infrastructure, etc. So the market needs, or the prices need to buy this new land, need to be able to finance this new land to be able to cope with the higher demand. So interesting to see that both demand and supply have increased by nearly 100% on the corn and soya markets, and this is clearly due to the very strong demand from the animal feed sector and from the biofuel sector. So these two sectors have taken the world demand much higher, and interesting to see that the wheat demand has increased only by 30%, because this is only due to population growth in the world. So it's really a change of habits from the Chinese, the Africans, all these new rich countries that have not only their population have grown, but also their eating habits have changed. from eating vegetables protein to meat protein. And as you know, you need 1 ton of vegetable, you need 6 tons of vegetable protein to make 1 ton of, for example, beef protein. So this has massively increased the demand. And once again, to meet this new demand, the market had to buy into new land and into higher yields. So the next steps, and that's why I believe prices could move even higher in the coming, I would say, 10 years. The next step, because we are already starting to be a bit toppish in terms of production potential in South America and in Eastern countries, the next step might be Africa. And for the Africans, because they've got the land, they've got the weather, for the Africans to be able to massively grow these crops, once again, there will be massive investments. We're talking about hundreds of billions of dollars. And for these investments to be done, you will need the food price, the crop prices to be much higher, which means a very good news for UK farmers. You will normally never see again your prices below 100 quid like we had in the past, I think 5 or 10 years. So good news for farmers, even if your costs are also going up, your output or your crop prices should keep on climbing in the coming 10 years. So let's come back now to today's market. This is, again, I'm talking about Chicago. I will come back to the UK, of course, later in this presentation. But these 3 graphs that represent the 3 major crops in the world, corn, wheat, and soya, are telling you the market story. So last season, when prices went up also very strongly, what this graph tells you is that if wheat prices went up so strongly and rapeseed prices went up so strongly, it was a corn and a soya story. Okay, we had quite a few crop disasters in Ukraine, in Brazil, also in the US, that has led to a very, very low level of stocks for corn and soya in the world. And prices went to the roof. As you can see, we've reached record high levels. And this has taken all the complex, because corn and wheat are very correlated. You can replace one with the other. So wheat has been following this trend, but the story was really about corn and soya. And since July this year, as you can see, corn and soya have slowed down, have even consolidated quite strongly, because Brazil is doing its job, US is doing its job, Ukraine is doing its job. I mean, the crops are there, so the stocks are stabilizing, and quite a lot of demand have been rationed, even on the biofuels or on the feed sectors. And it's now really, as you can see, the wheat hasn't moved, has even increased, sorry. So just watching at these prices, you can see how the market story has changed from corn and soya leading the markets higher to a wheat story. So corn and soybeans are still quite tight, but it's really the wheat that is taking the prices high. So this graph, which is a little bit technical, which is the spread between corn and wheat on the world prices, is showing you exactly what I'm telling you. Last year, until more or less this summer, the corn wheat spread went very strongly up, which means the corn was going higher than the wheat. And since June, July, when we had this massive crop disaster everywhere on the planet, it's really the wheat that took the lead. So the wheat now is climbing faster than the corn. So just by watching this graph, you know that last year in our ODA publication, we were talking 90% of what we were focusing on was the corn. Since June, July, we are focusing mainly on the wheat. Just very quickly give you a good insight of what has happened over the past year. As you can see, 300 euros, so about 320 euros price increase on rapeseed. For the new crop, it's about 200 euros. So that gives you a taste of how important it is for farmers to be aware of what's going on, to be able to anticipate it, to be able to take good decisions, and not only listening to your traders, because if you were listening to your traders, you would have sold certainly somewhere here or certainly too early, because of course they will always incite you to sell early because they need your crops. So very important to have an independent information and advice, simply because, as you can see, the price change is just massive. Same for wheat, 62 quid price increase over the past year. For the new crop, it's 43 quid. Very important here again to understand why, and to be able to have independent advice, to be able to take advantage of this price increase. So let's move to the UK now before we move back to the world markets. As I said in my introduction, UK markets are still important for your UK prices, and we'll see here 3 or 4 elements you need to watch for to be able to predict your prices or take decisions on your prices. So first element is the currency. So we've had 3 or 4 years of great difficulties with a very volatile currency market in the UK. It was really a nightmare for us because the impact was nearly 10%, and the underlying wheat prices was very little volatile. So I think most of the volatility in the past, since Brexit was voted, came from the currency, and we are now very happy to see that this volatility has disappeared. We are the sterling is trading around 0.85 since January, which is a very good good news for farmers, because we can, or at least for us, because we can now very much focus on the fundamentals of our crops and not on the currency. So the currency at the moment, until further news at least, we consider it as very neutral in our strategies, simply because there is no more volatility. So just a quick understanding of that. The weaker the sterling is, if we move to 0.90, for example, the more favorable it is for your prices, and the stronger the sterling is against the euro. Let's say if we move to 0.80, it has a negative impact on your prices. A quick look on this crop. A bit like the year before, we've had a pretty hectic drilling conditions, but a bit better than it was before. Then we had this drought during spring, and then we had these very welcome rains coming at the beginning of May, if I remember well, which has allowed the crops not to be excellent, but to be at least the yields to be relatively decent when compared to where we were, of course, in March or April. So the final production is still under debate for wheat. DIFRA has published 14 million tons. The trade is more at 14.5 million tons. So it will be somewhere here. So this is pretty neutral in terms of being an export or an import country in the UK. But what we know, and we'll see that a bit later, is that there has been massive quality issues, specific bushel weights, etc., etc. So you know more than I all the problems you've had, which means that in the UK, even if you have a large feed wheat supply because of lower qualities, you have a real deficit of high quality wheat, which means you will be dependent on an importing country, on a massive importing country, on the milling wheat markets, and you will certainly be, the UK will certainly be a net exporting country for the feed wheat market. And that's why the feed wheat remains pretty low when compared to high quality wheat, because high quality wheat, you need to import it, so you need prices to be very high. That's why the premiums went up to the roof. And that's why feed wheat is still very discounted when compared to outside wheat. Even if prices are high, we are very discounted. Rapeseed. Well, you all know how difficult it is to grow rapeseed in the UK. So without any surprise, the production has collapsed since for the last 2 or 3 years with the end of the Nico. I only have problems to say it in English, but you know the nicoticides or something like that. So as you can see, for the last 10, 20 years, because this is more or less the rapeseed usage in the UK is roughly 2 million tons. So for many years, the UK was not only self-sufficient, but was also considered as an exporting country. We were exporting sometimes 100, 200, 300,000 tons outside, which meant that your prices in the UK had to be low enough. You didn't need to import. So prices, when compared to Matif, which is the benchmark for rapeseed prices, your prices need to be low enough to be able to export the surplus. And because you didn't need to import, you could remain pretty low. So usually, in most places in the UK, you were being bid about 14 to 15 quid under Matif for your ex-farm price. Okay. Since 2019, and most importantly, in 20 and 21, you have seen your prices, your rapeseed prices, moving from minus 14, minus 15 quid to Matif to nearly now 0 basis, which means you gain, thanks to this lower production and the fact that now you need to import nearly 1 million tons of rapeseed from outside the UK, your ex-farm prices has moved from minus 15 quid to Matif to nearly 0 quid to Matif. So this is a 15 quid gain, just simply because you are an importing nation now. And no matter what, even if we expect 2022 to be higher, I mean, most of our clients have, thanks to higher prices, have increased their acreage versus 20 and 21. Some of our farmers who had stopped totally doing rapeseed are starting again. So very, very clearly, if we don't have any too many flea beetles issues, next year we can reckon we will be rather around 1.5 million tons, which will still put the UK into an importing situation, which means that your basis for next year should again be favorable for you. Quick word about barley. So without any surprise, the barley acreage went up and the production went up too for the winter barley acreage. Last year, 2020 was a massive disaster. This year was still difficult to drill barley, but the acreage and the yields managed to increase too. But here again, we had pretty massive quality issues on bushel weights. And the consequence of a lower production, if you compare to a 5 years average, or at least to 2019, the consequence is you have a very decent discount to feed wheat at the moment, minus 15, sometimes minus 10, which to our point of view is a selling level. Okay, you don't sell when it's minus 30 or minus 40. At minus 15, minus 10, it's a selling level. Malting barley, same thing. 2020 was a massive year for spring barley, where we had very discounted prices on the UK market, and this was again due to the poor winter drillings acreage, and most farmers had to compensate with higher spring drillings, which a lot of it was done on spring barley. This year we had a big drop and also some quality issues, which has led also because you have a higher demand from malting from malters, because pubs are open again, beer production, beer consumption is increasing. So for spring barley, the production has decreased. The quality, not only in the UK but all over Europe, are low. So the malting barley premium to wheat and to feed barley is very high. We're talking about 30 to 35 quid over feed wheat at the moment on the UK market. I mean, 250 or above is available. I think another interesting thing about the UK is these are the UK cereals and oilseeds area. And as you can see, it has, well, without any surprise, it has gone down in 2020, but more surprisingly, it went down pretty strongly also in 2021. So we are talking about, when compared to a 5 years average, we are talking about 100,000 hectares less drilled area, So I don't know yet if it's a trend or if it was also due to the poor drilling conditions, but it's really something to be followed up. So maybe part of it is going through the environmental stewardships, etc. But I mean, the government should be careful, because if the trends keeps on going for lower acreage, we could lose some of our food security in the UK, and thus it could become problematic not only for the country. So, it could become problematic simply for the industry, and you will be now relying on importing from outside the UK, which means that your local prices will need to be much higher than the world market to be able to import into the UK. So SNDs, we don't have a lot of time to go through the SNDs, but in ODA we had two scenarios. One was 15 million tons, the other one was 14 million tons. And of course, it has a very strong impact, as I said, on the fact that UK becomes a net or exporting or net importing country. So how do we measure price rise if the UK is a net importing or net exporting country? We look at the spread between Life and Matif. Okay, Life is a feed wheat contract, Matif is a milling wheat contract, and as we can see, so at the moment, Life is trading at 25 quid below Matif. Back in June, it was trading at -5, so it went down 20 quid, which means it doesn't mean that Life went down, but Life went up at a slower pace than Matif did. And this is very easy to understand. Matif being a milling wheat contract, and the world, Europe, the UK, and the world having a milling supply issue that I will develop later in the presentation, the spread between the feed price and the milling price has increased massively, leading to about 25 quid now. So what does it mean in terms of markets? It means that the UK feed wheat price has priced itself much lower than the European market, because even if we have a shortage of milling supplies, we have a surplus, or the market is considering we have a surplus of feed wheat in the country, and that we will need to export it to France or Spain or whatever destination in Europe. So the market is doing its job by lowering the UK price to be able to gain market share in Europe and be able to export it. The quality wheat. So this is in the UK, this is an HDB survey. Interesting to see that even if 2020 wasn't a real benchmark, it's interesting to see that in 2020, we had 32% of our wheat meeting the Group 1 specification. This year in 2021, we've got only 23% of the wheat meeting the full specs. So this is leading to a shortage situation, and this is leading to this situation, which is a bit similar to what we had in 2008. So that's why we chose 2008 as a benchmark. So these are the milling wheat premiums in the UK in 2008, and this is where the market stands at the moment. We hear bids between, let's say, 43 to, we have a client who sold at 53 above feed wheat last week. So the market range average is about 45 quid per ton. Only a month ago, it was at 30. And just before harvest, it was at 2022. So clearly here, having a view of the qualities, because we do surveys in ODA, so we knew quite soon in the season that there was a problem in the UK. And furthermore, we knew that there was a massive problem of quality wheat supplies in France, in Germany, in Canada, in the US, plus Russia. So we knew that the world market was going to be in a real shortage of quality wheat. So by knowing that, it allowed us to advise our clients to hold on fixing the premiums or to hold on any quality wheat that was meeting the specs. So very soon in the season, we told our clients, don't sell, just hold on your quality wheat that has met the specs. Our target is to sell around 50 quid, so we will certainly soon start selling some or fixing some premiums. As I said just before, barley for us is a sell in terms of discount. So feed barley is discounted around between -10 and -15. So this is a very decent level to sell. Spring barley has a very strong premium at the moment of at least 35 quid. Once again, it's taken up not only by the UK market because of a shortage of supply and shortage of quality malting barley. And it's also taken up by the export market. For if some of you are close to the ports and are malting barley producers, you will know that COFCO and other traders are massively have a very strong demand for your malting qualities, simply because the European market has had similar problems as in the UK. So the malting barley is at the moment very well priced because of shortage of quality supplies. Oilseed rape, so it's really an historical, I would say, season. We've reached record levels. So it's important to understand that rapeseed, I mean, if you were to compare with soya, for example, soya is not very high at the moment, and rapeseed has reached records. And the major reason for that, two major reasons. First of all, rapeseed prices are correlated, 100% correlated to the vegetable oil markets. So you need, if you want to be able to forecast where the rapeseed market is going, you need to look at the vegetable oil market. And the main vegetable market in the world is palm oil. It accounts to nearly 50% of the vegetable oil supply in the world comes from palm oil. So there is a futures market called in Kuala Lumpur that we follow. And as you can see, on this graph here, the palm oil prices are at a historical high. They went up nearly 70% in the past year. Same for soya oil that has reached record high levels at the moment. So it's really, I mean, the reason why rapeseed prices are so high is simply because for two reasons. Not only there is a shortage of seeds in the world, and I will develop that later, but also the very high oil prices, rapeseed oil, palm oil, soya oil, allows crush margins to remain very strong and allows crushers to pay you what they are paying now because of the very strong vegetable oil prices and, of course, the biofuels prices. Another reason for that is, of course, the crude oil prices that are climbing nearly steadily for the past year or so. And as you know, 70% of the oilseed rape crushed in Europe is used for biofuels. So the higher the energy price is, the higher the biofuel price is, and the higher the crush margins for crushers is. So it's all looking very good for rapeseed this crop. Very big shortage. We will develop that later on. We have more questions about the new crop afterwards. So a quick view now on the stock levels in the world. So as you all should know, at least the crop prices are directly correlated to the stock levels. So it's very important for us to watch at the stock levels. So here you can see that for the past 10 years, we've reached nearly 10% stock to use ratio. So the way we monitor stock levels is what we call stock to use ratio. So a 10% stock to use ratio for corn is a very low level. Okay, we've even reached 9.8% this last season. For next season, because Ukraine, US, Brazil, and Europe are about to harvest a very good crop, we expect not only the stock levels to stabilize, but to re-increase slightly. So this is a very good news for the market, for the buyers. But it is pressuring a little bit the prices down. But we will see that there are other reasons for maybe corn prices to go up. But stock levels are very important. And as you can see, corn stock levels have gone down and are still very low this season. Soya stocks, sorry. Here again, you can see for the last 3 or 4 seasons, they went down from 40% to nearly 25%. which is also historically a very low levels. Just for you to understand, in the US, we are ending the year with 8 million tons stocks, which accounts for about 2 weeks of exports to China. So this is really the lowest level you could ever get to. It's close to zero. So that has led the oilseed complex to go up. And rapeseed is even a tighter story. So rapeseed, it's not a story starting this year, even if there has been some particular event this year. I mean, rapeseed, as you know, has been more and more difficult to drill in the UK, but also in Europe. So in the UK, it's simply because of flea beetles and disease not being able to be addressed by farmers. But in France, in Germany, who are the two major producers in Europe, it's absolutely not a problem to grow rapeseed. The major problem came from very dry conditions for the last 2 seasons, not these seasons, but in 2020 and 2019 and 2020, we had a very dry August and September, which has not allowed farmers to drill what they wanted to drill in terms of acreage, which has led the European production, which was for many years around 21, 22 million tons, it has led this production to fall to between 17 and 18 million tons. So nearly 4 to 5 million tons less production over the last 2 years because of lack of acreage. So this has led, when in the previous year, Europe import needs were around 2 to 3 million tons that we were importing from Canada and Ukraine and Australia, sorry. This import needs surged to nearly 7 million tons this year, which means that we have increased our import needs by 4 million tons. And in that situation, we needed Canada, Australia, and Ukraine to grow massive production. And it's not what happened this year, as you know, because Canada has had a massive failure in this production because of a drought. So the consequence is very low stocks. I mean, these stocks are as low as they have ever been, and rapeseed prices climbing to the sky, also supported by the very strong vegetable oil prices. So just to understand the rapeseed prices very quickly, the rapeseed market, sorry, very quickly. It's a very simple market when compared to corn and soya and other markets. The market is very simple. Europe has a very strong need of about 27 million tons, let's call it 25 million tons needs for their crush capacities, of which 70% is done for biofuel, which means it's not negotiable. I mean, these are incorporation rates stated by the states, etc. So these volumes that needs to be crushed are not negotiable. You need to crush them. Okay. Because we've had lower production over the past 3 years, sorry, in Europe, our import needs have increased, and our dependence towards Canada and Australia have also increased. But the problem this year is that we've had a disastrous drought over the Canadian rapeseed canola production, which has led to a nearly 7 million tons drop in the production. In June, we were expecting the Canadian canola to be at 21 million tons, and we ended at 12.8 million tons production. So all this canola that was meant to be imported into the UK and Europe just disappeared. So as a consequence, we are now only relying on Australia. So likely enough, Australia is about to harvest a very big crop, about 5 million tons this year, that should allow to more or less balance our needs, but it will be very hard to achieve. So it's a very simple market, a lot of import needs in Europe, relying on other countries. And if other countries have a problem, it becomes very problematic for prices. Now, if we talk about the new crop, drilling conditions have been close to perfect here in France and Germany. They have been pretty good also in the UK, but UK is not a major price influencer for rapeseed. So what we expect for new crop is production to increase, of course, if weather allows it, to increase in Europe. We also expect, given very high prices, production to increase in Canada and to increase in Australia and maybe also in Ukraine. So when we see prices at nearly 600 euros for new crop on rapeseed, we clearly alert our clients that this could not last, because these prices are high, with sympathy with the old crop prices. And if next year we have a decent crop in the EU, our import needs might fall to 3 million tons. And if Canada and Australia have good supplies, prices will not be there anymore. So let's be careful. So that's why we are starting now to hedge and to take some action on next year's rapeseed. Wheat. So the wheat story is the main story this year. And the reason for that is not only lower production, so it's pretty well illustrated here that the major exporters stocks are going down, but the main story is not only about volume, it's about quality wheat available for the world. And quality wheat is a human consumption crop. And here again, the demand is uncompressible. I mean, it's unelastic. I mean, people want to eat pasta, people want to eat bread, etc., and they will not lower their consumption because prices are high. So it's very unelastic to price increase. So very difficult to ration the demand, but the supply we know now are very low, and we will only be able to restock this market in July next year. So it's really an all crop led market with very little downside. So in terms of risk management, it's very important when we decide to hold our stocks and advise our clients to hold on their stocks, is we look at the downside risk. And at the moment, and certainly for a few more weeks, at least until Christmas, there is no downside to this market, simply because the demand is very strong and supplies are becoming more and more difficult to source. So what can I say? Yes, just a focus on, just to give an example, on the French milling wheat. I mean, usually the French are, of course, they are the biggest milling wheat producers in Europe, and usually they achieve, just if we take a look at here, the average is about 78 to 79 specific weight, you call it bushel weight. And this year we achieved 74, which is below the 75 level that is needed for exports. So as a result, only 30% of the French milling wheat, has achieved export specs. So the supplies have totally shrunk. Only 20% of the French durum wheat, which is used for pasta, has met the specs. And similar situations have occurred in most of the northern EU, including the UK countries. So if we were to look at the Europe in itself, the south part of Europe, even the southern part of France, and if we move to Romania and south of Ukraine, all the qualities were very good when the harvest started in July. So until more or less the 20th of July, all the trade was betting on a plentiful crop with very good qualities. And then not only rains occurred, which has delayed the harvest, but we also had a lot of rain during June. And when we moved northern, so when we moved to Czech Republic, north of France, Germany, Poland, etc., the market realized with big surprise, and even farmers were surprised, that not only the yields were affected, but the qualities were very low. And this came as a major surprise. And when the market is surprised, it creates what we call a squeeze. A squeeze, it means that traders, cooperatives, buyers, etc., have massively bought forward some crops, some quality crops that are not available at the time when they need to load it or to use it. So these traders had massively also sold to China, to Algeria, to many destinations, and they couldn't find the appropriate quality. So that has led to this August until now a market squeeze where all the traders and the market are running after this market simply because they cannot source what they need or what they sold on the international market. So there are some adaptations, as I wrote here. China and Algeria have lowered their specific weight requirements, which is allowing new supplies to come on the market, but still it is very problematic at the moment. Just to give you an idea, out of all the export that went out from Europe at the moment, 70% came from the Baltic and from Romania. So these are the two places where you can find and source some very decent quality wheat. The rest is very difficult. So these two regions, Baltics and Romania, are very soon going to run out of supplies. So the question is, where are we going to find it? And that's why you see matif prices and live prices going up days after days, because we do not see the demand going down. We even see it going up. And I will develop that a bit later on. So other things we look at is, of course, the export pace. As you can see here, the Russian exports. So here is the target we have for the season. Here we watch at what happened last year, and here we see what is really happening. And as you can see, this is about 2 million tons. Russia is at the moment 2 million tons ahead of its export program. So this questions the ability of Russian to be able to cope on the second half of the season with all the world needs. And it also questions very directly the potential interventions of Russian officials to slow down this export space by taking, as they usually do, in January or February, some measures to slow down the export space, which is, of course, to be considered as very bullish for the world market, because there will be less wheat available for the world market. Same in Europe. We are very much in advance on our export program, simply because the demand is very strong. And here again, because we have lower supplies, we can only expect this export to, at a time of the year, to slow down, simply because we will not have any supplies. So this is also very bullish for the coming months. So buyers have, because they are also very much aware of the problems, are massively buying their needs. Egypt, who is the biggest importer in the world, is buying nearly every week, when normally they tender twice a month. They tender every week. Yesterday, Saudi Arabia, who are very cash rich thanks to their crude oil, have bought 1.3 million tons, which was really surprised the market of milling wheat. So these massive purchases are in front of very low supplies. There is a lot of wheat in the world, but milling wheat supplies are very, very rare. Is taking prices to nearly 300 euros on matif, and we really reckon we will touch 300 euros. And clearly, because we do not see any signs of demand rationing, we expect prices to keep on climbing on the old crop. So we, of course, also watch the price competitions between Europe and the Black Sea. It's very important. So we can see that Europe at the moment is trading more or less at $345 when the Black Sea is trading at $330. So we are trading at $15 higher than the Black Sea, which is a good news because we don't have a lot of wheat to export. But if the Black Sea was to become to have less supplies, it could change. And in that case, if Europe becomes competitive versus the Black Sea, so if European prices start to be below the Black Sea, it becomes also a very strong bullish signal for our region. So we always watch weeks after weeks the price difference spread between the origins. Let's move now to a quick word about China, because I'm sure most of you heard about, and that was really last year head news. And I just wanted to explain you in just a few slides what happened in China and what is happening in China. So the real, I mean, big revolution in China is the pig production. So since they had these flu issues with pigs, the government about 3-4 years ago took a very strong decision. They just forbid to grow pigs in the farm backyards. I mean, in the past, in the very recent past, there were millions and millions of Chinese farmers growing 10-15 pigs in their farm backyard, and that was the majority of the Chinese pig market. And they prohibited that and moved that to these massive units. I don't know if you can see them on your screens, but they are like big flat units where, I mean, they are like car parks. I mean, they grow the pigs on the top floors, and then they move down as they grow, and then they kill them, and then they cut them, and then they export it. I mean, floors between floors. But what is important is all these massive units, and there are tens and tens of units like that created in the past three years in China, have increased massively the feed needs. I mean, units like that can eat up to 16 Panamaxes of corn per week. So not only these pigs you see on the left were eating maybe a bit of garbage, but I'm not sure they were eating some proper soya meal or corn rations. These pigs are eating proper food, proper industrial food, and all these I mean changes have raised very strongly the demand for feed supplies. So it's meal, soya meal, and partially corn. And simultaneously, when this demand increased, China has had a few weather issues and few production issues last year, which has led to a very surprising new demand on the world market. And that has led, I would say that maybe 20 to 30% of the price increase of your wheat in the UK last year was due to this corn new demand from China. And I'm going to try to explain you roughly how. So as you can see, China for the past maybe 30 years has been a very little player. So we were not taking China into account when doing our S&Ds, was importing sometimes 3 million tons, 1 million tons, 2 million tons, when compared to nearly 1.5 billion tons production in the world. So they were absolutely not affecting the market. And last year, very surprisingly, once again, the market wasn't expecting that. They grew their import needs to 26 million tons. So 26 million tons, you will tell me, it's nothing when compared to, once again, more than 1 billion tons production in the world. And here I would like to take this opportunity to explain you how the world prices are made and why a 20 to 25 million tons new demand, surprisingly new demand, is very important for prices and has a very strong impact on prices. And the reason for that is, if you look at just at the corn here production in the world, so as you can see, we produce around 1.3, 1.4 billion tons of corn in the world, but it's not the production that makes the prices, it's the volume of corn that is being traded around the world. And the volume out of the 1.3 billion tons that is being produced, only about 200 million tons is being traded. And it's these 200 million tons that make the world prices. So if you add 20 to 25 million tons additional and surprising demand on these 200 million tons, it's 10 to 15% increase in demand in the world. It's sudden, it's surprising, and it wasn't expected by the market. So the market climbs exponentially when this new demand arise. I mean, the world demand usually increased by 2 to 3% every year. Here we had a sudden 15% increase in demand, which has led the corn market to nearly double in just a few months last year. So it's very important to understand that a higher demand or lower supply in exporting countries has a major impact on world prices, simply because it's only these small quantities that are being traded, for which it's also about 200 million tons. For barley, it's only 25 million tons. So if you lose in an exporting country like Russia, you lose 10 million tons of production this year in Russia, it's 5% of the total exports that just disappear. And that has a major impact on prices. So what do we do for China? How do we? It's very difficult to read into China, of course. So the best technique to follow up on or to anticipate the Chinese needs is to compare the domestic corn markets in China with the delivered price of the delivered world price into China. So naturally, always it's about the Chinese market is about $50 to $60 above the world market. This is normal. It's a way for the Chinese government to incentivize farmers to grow corn, etc. So it's a kind of subvention. But as you can see, when we had last year this massive problem of import needs in Russia, the spread between the Chinese corn price and the world price was nearly $150. So it was nearly $150 cheaper for a Chinese buyer to buy it from the US or from Brazil than to buy it from the Chinese market. So this has led to this massive price increase. Okay, I will move a bit faster now because I'm conscious about time. Of course, we look at weather. Weather is key for us. Here, I'm going to expose very quickly what are the key regions we are looking for. So, of course, we are looking at the drilling conditions in Europe and in the Black Sea. So, as you can see, and you know, in the UK, it has been pretty wet, but I think you've all had some shiny days to be able to drill in good conditions. Same for Europe, same for France, for Germany, etc., up to Romania. There is a bit of dryness in Poland, Czech Republic, but nothing dramatic. But we do have an alert at the moment on the drillings. So the drillings are over in Ukraine and Russia, but this drought has lasted for quite a long time now. So that means when you see this color, it means they only for the past months received 20% of what they usually receive. And we know as a fact that the area for winter wheat and certainly also winter rapeseed, maybe to less extent in Ukraine and Russia, are going to decrease. That's for next crop. So even if in Europe it's all going on very well, and the acreage is on the upside, in Russia and Ukraine it's on the downside. So it's really something to look at. And also the plants are going to enter the winter in maybe poorer condition that they should do. So it's an alert, and we're going to follow up on that on a weekly basis. We also watch at Brazil, which is once again the second biggest exporter in the world for corn and soya. So last year we had a disastrous crop in Brazil, which was responsible for also maybe 30 to 40% of the price increase of UK wheat in the UK wheat. Sorry. So we watch that very carefully, what's going on in Brazil. So last year we had La Nina having the weather event La Nina having a very negative impact with the largest drought they've had in 100 years. So their corn crop went down nearly 45% last year in Brazil. And we're talking about nearly 30 million tons that have disappeared from the world S&D. This year, we are watching the weather maps. So we know it's still dry, but we are seeing that there is a lot of rains in the growing areas. And we are watching the plantings. So the plantings, when compared to last year, are faster and earlier, which is very important. I will not have a lot of time today to explain why, but so far, so good for South America, which is a bearish signal for next crop. Okay, so what you need to retain is Argentina and Brazil so far are having very good conditions. And we don't only watch weather maps, we have very strong contacts with some Brazilian people and some Argentinian people. I talked to them even yesterday. Everything so far is looking very good in Brazil and Argentina. They're heading for a record crop. So always bear that in mind when starting to think about next crop, okay? There might be some restocking.
10:30, Sébastien.
So, sorry?
10:30, Sébastien.
Yeah, okay, I will move fast. So in the US, yes, sorry, another thing very quickly for wheat is there has been a severe drought in Iran, Iraq, and Syria and Sudan that has led to higher importing needs. So we don't only look at exporting nations, we look at importing nations, and when they have a crop disaster, we do it does increase also the demand. So there is clearly a real concern about these countries having to import much more in a context where we have lower supplies. And I think I will maybe conclude here, Gary, with this graph, which I think every farmer should have in front of their desk, which is an historical graph, because one way to address your risk management and to take some decisions is to look at history, looking at history to predict the future. And if you look at every time in the past 20 years when live prices reached or exceeded 200 quid, each time, without exception, it then fell by 50 quid. So I'm not saying it's going to happen next year, but we need to watch for what I've just said, the possibility of restocking. Once again, prices climb to ration demand and to incentivize farmers to drill more and to invest more in their fields, okay? So far, drillings are taking place in a pretty good conditions all over the world for rapeseed, for wheat. So we can only expect next crop, so far, without weather incidents, we can only expect next season to be a restocking. Stocks will remain low, but to be a restocking season. If it happens, prices will have no interest and no reason to remain where they are. So in terms of risk management, we need to take action. So what we do in ODA, we consider the whole crop as a very bullish market, and there is nothing that is going to change it. So we consider, and we still have a few stocks to sell on the whole crop market, so we are holding on that. And we consider that the new crop at this stage is only going up with sympathy with the old crop. So as we will be moving in February, March, or April closer to the new crop, the market will start concentrated only on the new crop. And if there is a probability of restocking, prices will, without any doubt, fall. So it's just now a question of timing. We are still holding. We sold only 20% of the new crop. We are still holding, but do not hold too much. And my 25, 30 years experience of trading and selling for farmers have always told me one thing: we always forget to sell the new crop or the new crop, even 2023, when the old crop is so high. So it's really an old crop problem we're having at the moment. New crop could be a very balanced market, and in a balanced market, prices are not at 200 quid. So bear that in mind. Now it's a question of timing, when to press the button, etc. So, well, I will have no time to speak about fertilizers and the risk, but clearly, I think with what I've said, with this conclusion, farmers do not like selling in rising markets, but with current margins you have now on rapeseed, on wheat, on barley, etc., do not hesitate, if you're happy with what you have in the fields, to start selling. So what I would do, because we are in a very unprecedented situation where all crop could really move to record levels this year because of this very tight situation, I will do it step by step. If at the moment you can sell your wheat at 190 quid for November 22, do it, but do only 5 or 10%. And next week or in 2 weeks' time, if the market reaches new records, you will be able to act furthermore. But my recommendation is be careful. Prices do not climb to the sky, and without major weather events, prices next year, and that's maybe a good tip for the price you could send to Victoria. Prices will certainly not remain where they are next year if there are some restocking probability. That's my conclusion. Sorry to have been a bit long, but I'm always very happy to talk about markets. So it very often takes me too long. Maybe I will. I can answer to some questions if there are, if we still have time. Victoria,
Yes, brilliant. Thank you, Sébastien, for that. Aisha, do we have questions?
Yes, we do. We have quite a few. So first one, this is from Andrew. So question for Sébastien, UK farmers have seen a huge increase in fertilizer prices with an reduction in supply. Is this a global issue or just a UK-EU problem?
okay.
And will this reduce the amount of crops or yields globally next year?
Yeah, so that's Andrew, that's a slide I wanted to develop, but without any time I couldn't develop it. So I will answer very briefly. So no, it's a worldwide issue. So everywhere prices are not only fertilizer prices are very high, but also availabilities are very difficult to source, especially for liquid fertilizers. So I think two consequences, and the two consequences are bullish for prices. First consequence is you cannot you cannot afford to if you're a corn producer, for example, in Brazil or in the US, you consider, given the corn price, that investing too much in fertilizer is not profitable. So that means that the corn prices are not high enough. In that case, you will maybe switch to cotton or to sunflower in Europe, etc. So that means a very bullish, because you will have lower crops, because farmers will take decision to drill less crops that needs less fertilizer. So that's bullish because you will have a lower supplies. And the other way to look at it is markets are very smart and prices are very smart. So what will happen, because no one in the market wants US or Brazilian or European farmers not to drill any corn next year. So the market and the prices will adjust accordingly to the production cost to allow farmers to drill more. So both are bullish.
Thank you, Sébastien. Got another anonymous question. So the first one is, what is the global wheat production shortfall? And at what level is wheat too expensive to ensure food security for developing nations?
Okay, very complex question. So first of all, more than ever, I mean, usually we are very good at knowing what is the demand, what is the supply. The problem here is we have a quality issue, and being able to fully address worldwide what is the quality problem, considering that many importers are lowering their specs, requirements, etc., is very difficult. We know there is a major problem. We know also that, as I said, Iraq, Iran, Sudan, etc., there could be up to 25 million tons additional demand. So we know it's a massive problem. We have difficulties to address exactly with figures what is the extent of the problem. Okay, that's one question. The other question is at what price level will demand be cut, or will some countries like Egypt, for example, have difficulties to pay for the wheat? We haven't seen that for the moment. I mean, all these countries are very active. So I do not have a clue. I mean, if we talk about these countries, a lot of them have their revenues from crude oil. Crude oil prices are at record levels also. So if we talk about Saudi Arabia, for example, they bought, well, we know they are rich countries, but for Egypt, so far, there is no signs of demand rationing or payment issues. Okay, but they have very strict payment policies now. They pay 6 months after they're being delivered in Egypt, etc. So far, no problems. And if we talk about Algeria, they are one of the biggest gas producers in the world, so I'm sure they have the cash for that. So no demand rationing signs for the moment, according to these high prices.
Thank you, Sébastien.
Thank you. I think what we're going to do there, with the other questions that we have, if we answer them in our follow-up email with this, so that I'm just conscious of time. Sébastien, thank you so much for that. That was brilliant. Would you be able to stop sharing your screen?
Yeah, all right.
Yeah. That's great. Brilliant. Thank you for that roundup. Again, we'll make sure that all the information answers are sent out on an email as well, because those questions are very important to be answered. Just as a reminder, if you haven't put your guesses in, please do in the chat option. We've seen some good guesses so far. Someone, I think, wants the woolly hat instead of the champagne, but there we go. I would like to say thank you to Sébastien and Gary for their time and putting together this presentation for us. Also, a big thank you to all that have attended. We really appreciate your time and support and hope you come away with some knowledge gained. We would be extremely grateful if you could complete the event survey that you receive at the end of this webinar. All feedback welcome. And just to end, we at Graindex are excited about our future. We hope that combining quality industry partners such as ODA with our trading platform, we will provide you the best marketing tools and opportunities. Graindex is still relatively new, but as Henry Ford once said, if I had asked people what they wanted, they would have said faster horses. So leaving you with that final thought, again, thank you to everybody and hope you have a great day.